Thanks a lot. Good afternoon, everyone. Welcome to our panel. We'll try and make it as interesting. It's supposed to be insightful, and we'll try and meet that expectation. So everybody, please share your best insights. Topic is cash on delivery, and how likely is it to stay or get replaced? Just to put it in context, we're talking about cash on delivery, which is about 50%. So broad estimates, it's a $5 billion cash floating around all across India in the hands of delivery people, and taking about 7 to 10 days to complete the full cycle, which is a lot of cash out there. This introduces a lot of inefficiencies. It also has other issues like cash on delivery products tend to have higher returns. Hemant was sharing that in general, the returns on cash on delivery is about 3x of compared to the products that are bought prepaid before they're shipped. So there is problems that they cause, both in efficiencies in cash management, as well as from the retailer side, it's a big cost for cash that stays out for so long. So there is certainly a problem, but on the other hand, it is a highly convenient and innovation that is unique to the Indian market. Also, I'm hearing being copied by other markets which are still early in their e-commerce adoption. It's unique to India because it introduced large comfort in doing something which was very alien to all of us about 3-4 years back. And now we are very used to it thanks to COD being a large part of how we transact. So big questions for us, for the panel today is, given it is India that we are living in, is COD something that we are going to continue seeing over the next 5-6 years? Are there better solutions? Is COD, in some words, a necessary evil? Or is it something, an assurance unless something else steps in? Is it going to be the lubricant for the e-commerce adoption to happen in the country for the next 5 years? So all big questions. I'll start with some questions for the panel. So I think the first question is, let's start with, just given the uniqueness of India, COD, which is such a large proportion, what does the panel think about the fact that COD is here to stay? Or is it likely to be a bridge to 100% digital payment economy over the next 5 years? Both based on habits and the efficiencies or inefficiencies it causes. Would like to hear the panel respond to how do they see COD? Is it a migration to something else, or are we likely to see it being there for the next foreseeable years? So I'll start with Abhijit. Abhijit, what would be your view on COD?
So I think there's a couple things to it. First of all, COD was very critical, and Hemant can talk to this in much more detail, to getting the consumer comfortable with new services like e-commerce. Again, I remember in the mobile wallet session earlier, it's a fact of life that people want to see, use cash, they want to see these goods before they pay for it. I do believe that the cash part of COD, all of us will try and make it easy for us to migrate off of that. I don't see cash ever going away, but cash can certainly reduce as a proportion of the amount of spend that's being happening on payment on delivery. I don't think it'll go away, and I don't think it'll go away soon. Maybe at some point we will go to a fully online mode, but I think that's segment specific. I think that's location specific. E-commerce, you may trust Flipkart and Amazon to a certain point where you actually don't need to see the goods, but there are going to be hyper-local, micro-segmented e-commerce plays where you will. Probably food being a very good example where I don't see it going away at all. I think one thing that is going to happen is all of us will make the electronic payment experience seamless, convergent, interoperable. People will want to pay in store, they'll want to pay at home, there's many different ways, and that part will be solved by technology, and it'll be simple and easy, whether it's a wallet or a card or something else.
Thanks, Abhishek. Your views?
Yeah, I think my take is COD will stay. It will probably in absolute numbers grow for the next few years. We still have some time before digital options will overtake COD. So in Echo, we handle cash absolutely daily in very, very large numbers. So the supply chain of cash is quite complicated. Quite complicated and extremely expensive. And you don't have good insurance products to take care of it.
What's your estimate on the cost of having $5 billion in cash?
Well, somebody said the number could be as high as 7%. For us, it's not that high, but it is, I mean, if we also don't take insurance. So it works in a very hyper-local manner. You build very strong local relationships with bank branches, which will where you make sure that cash gets accepted even in late hours. But it's a very, very tough supply chain to manage. It has taken us long number of years to build that. And also it is important to understand that the conversion of cash to electronic need not happen in one single way where the consumer ends up paying cash to the merchant, but also needs to happen in parts for the entire supply chain to eventually get solved.
Great, thanks. Hemant, you're in the middle of all this, so you're actually seeing that number.
So the way we see it, or if you look at it, we would look at it in this way that Indian consumer has been in the last 2-3 decades, and especially in last 2 decades, has been constantly in the phase of evolution. And we've always been ready to adopt change. The classic example we all talk about is the smartphone penetration, and across age groups we see. So likewise, cash is something which as an economy we are comfortable with, but it's in constant evolution, and over a period of time, it's about convenience. If it's convenient for me to pay, if it's convenient for us, to evolve an alternate payment modes, or the existing payment modes become more consistent with the way customers changing, the way he's evolving, there will be an ecosystem which will result into reduction of the usage of cash, because finally customer will look at convenience. And this, towards this is what we are seeing a lot of pain, especially on the payment side. If we rightly solve for convenience for customer to pay it easily, we'll see a huge migration out of cash.
And your move to app only as the COD problem or the COD proportion, are you seeing it or expecting it to grow larger or stay the same with an app only solution that you have now?
So the whole idea is not driven by payments. The idea is driven by giving customer a better experience while shopping, and that's the strategy behind seeing where we can give a much better experience and see how it evolves.
The tendency to pay on mobile, do you find it to be very similar to paying on the web, using cards or swiping on the cards?
So actually what happens is, look at, all of us have been transacting on mobile, we've been shopping on mobile. When it comes to mobile, the whole payment ecosystem has not really adopted the change with the customer. So it's not us who's changing, it's customers who's driving the entire change. And towards that, what has happened is that what we have, we're feeling it, what we realize it, that the payment ecosystem also has to change really fast, because the speed at which customers changing. And you see a huge amount of migration happening on smartphone, he's wanting to. When you go in, a simple case is where you actually go and make the payment on the payment page. You are in an app or you're on a site, you're making a payment through mobile, your OTP comes in the same mobile. You go out of the mobile, you go and fetch your OTP. Finally, it's in the tier 2 cities, and the customers who are actually paying by cards are comfortable. But your entire universe of 200, 300 million debit card holders, they're not comfortable using that form of payment. So it's how about, even a smaller thing like when you're on the payment page, is it really payment optimized? So the payment experience till the time you are on your shopping is great. But the moment it goes out of the shopping, when you're in the payment domain, are as small things as are the payment page optimized so that there is no stretch that he has to do? Does he get OTP very easily? Does he have to exit out of app? Smaller things to the larger things are really need to be solved for, to really get to customer where you make it really easy for him to pay. So
what I'm taking away is that COD is led by two things. One is just the general discomfort of using your card, and the second is the ease of using electronic payments on the exit or the checkout page also contributes significantly to the tendency to choose COD over. Personally, I think I've gotten into a mode where I feel that the delivery boy makes me run around a lot more when I've already paid, versus when he's on COD, he chases me on delivering the goods where I am. So he would not show up for 2-3 days. For me, the delivery is a lot more assured when I've not paid. So that's my personal experience. Bhavin.
Yeah, so to an extent, I agree with the panel. How I see the COD market, I kind of divided into two broad segments. One is the segment where they are capable of paying electronically. The other one probably is not, or is not comfortable or not convenienced. So the first segment, I think the worry for them is, will the goods come to me? So of course, with the likes of Flipkart and all, I mean, the assurance is much higher nowadays. However, I think when COD really started, and the reason why it has kind of, crept in, is because at that time, the assurance to the consumer that the goods will really get delivered, or the service will really get delivered, was probably not there. And that's where the whole concept of COD started. You have the goods and services in your hand, and then you kind of make the payment. So this is one segment. And the other segment probably just wants to pay by cash. I mean, that's where I support Abhishek as well, that probably COD is here to stay, at least not going away for the next few years. So I think we as a payment industry really need to work harder at figuring out how to at least capture the first segment. They are having the capability of paying through an electronic mode, but just because an option has been given to them, for cash on delivery, and it has, inherently, come into our e-commerce world, how do we kind of make it simpler and simpler for them, give them almost all the options that they require in order to make sure the payment happens electronically. So I think there is a lot of work which can be done to reduce the burden on COD. However, it will stay around for some time at least, is what my take is.
Anju, please.
So basically for us, when I look at Ola and Uber, they have really changed the way people deal with electronic payments and COD. That is, who would have thought that electronic payments only solution is going to be adopted as broadly and could have survived for so long with Uber just now adopting COD. So I think the user experience is critical. If you're able to solve for the user experience where by paying electronically it makes sense for me to have a wow experience, then the consumer is going to go find ways to go about and participate in that wow experience. And that's where I think the M-wallets also come in. So for example, as they were talking about Flipkart, at the time of me getting that delivery, then instead of me handing over cash to the delivery person, then can I go back to my Flipkart app and then paying with my M-wallet? So there are ways around creating a wow experience, but still staying with the electronic payments and kind of have...
So COD will stay, or we'll see it going away?
I don't think it will go away. I think there is unanimity that I don't think it will go away. That is, there is a segment of people who are comfortable with cash. But to go from the 50-60% down to something more manageable, which is a 10-20%, I think is a user experience conversation.
Got it. Thanks. Which takes us to the next big. So we'll focus on what we can control, or we'll control what we can make a difference in. And that's... according to Hemant, it's in the ease of your digital payment solutions. So right now, what we are hearing is that there is a significant gap in the user experience in just how you pay. Some of it has to do with the instrument you're using. Some of it has to do with just how many steps you have to take before you finally see the checkout happening. So let's talk about what are the new instruments that are coming up to, to alleviate the risk associated with prepayment on cards. Which give more assurance, which actually time it well. When are you feeling comfortable about making the payment through a card or through a wallet, as Manju alluded. Let's talk about some of those things. So let's start with, just polling what are the things that you're seeing which are either emerging as alternatives to cards, prepayment cards, and then we can talk about how they're likely to impact the proportion of COD. So, Abhijit?
So I think a lot of the innovation right now is happening on the consumer side. I mean, there's the consumer side and the merchant side. Mobile wallets are an obvious example of something that's new, growing very, very rapidly, taking a large share of the spend that normally would be on a physical card transacted. I think P2P is happening. We've always had a P2P system here in India. Many people here in this room probably know of IMPS, but many people outside don't. So there's always been a lot of instruments. I think whether it's through good awareness, better user experiences, ease of use, a couple of key merchants adopting them uniformly, we're seeing that adoption happen. I think on the merchant side, actually, it's about interoperability. The way we look at it at the very least is we don't know or we don't care how a consumer wants to pay. We want to enable a merchant to accept any form of payment anywhere. And that's where the technology challenge on the merchant side is, how do you make a mobile wallet payment or an IMPS payment or a card payment look the same with the same security and the same user experience from that side of things? And where the consumer side goes, who knows? I think there'll be a lot of things happening mobile to mobile with NFC, things like Apple Pay. I see all of these things evolving at their own pace very rapidly.
I think a few things which at least in Echo we can't any longer ignore is the fact that there are about 10 million low-cost handsets being sold every month. And we did a dipstick with our customers, and not a very thorough exercise, but 40% of the walk-in customers in my stores, which are really low and moderate income customers, now walk in with smartphones. And 50% of these customers walk in with their own data packs. These numbers are mind-boggling. In my company, we only had customer care through call center. We now get at least 10 to 15 queries on Facebook every day. We were just not geared to handle all of this. It's not that these things come from urban locations. These things absolutely come from even rural locations and very remote rural locations. So this is a change which we can't ignore. And a lot of last mile will get digitized. As and when these last mile do get digitized, they will have access to mobile wallets. And what is very critical is that a lot of this customer base is in many ways mobile first or smartphone first customer. So whether it is, so probably the e-commerce sites are already taking that, acknowledging that, and are shifting the focus towards mobile first apps. But we don't have a mobile first payment method or a mobile first wallet or a mobile first payment gateway or a payment instrument right now. And that is another change which must happen. Because as Hemant was pointing out, OTPs will not work as smoothly because it distorts the user experience on the cell phone. Probably we'll have to look at cardless checkout on e-commerce for really smooth experience. So some of that change is being led. We will see a future with all of these solutions, and that is being led by smartphones and M-wallets. So of course, M-wallets will. So one is this whole smartphone phenomena. The other thing which a lot of us through industry bodies pushing to the government is to create incentives for acceptance of digital money. And the first incentive which we are asking for is that stop hounding people who make transactions. For 2 lakh rupees of transactions on your credit card, you shouldn't get an IT notice. Allow for more digital transactions to happen, because that's, there are very few people who really want to, do save transactions in black. Most of the people are looking for convenience, and cash is not convenient either for the end customer or for the merchant. I have had this experience absolutely from very close quarters. Cash is the biggest enemy for the customer and for the merchant equally, and very expensive to deal with.
Great. So you make a good point that there is also this discomfort with getting scrutinized, or it's frowned upon, or sometimes it could lead to issues with tax authorities on crossing certain limits on your card payments. So there has to be a government.
Yeah, that can't be at the back of the mind of an end consumer.
That it is going to show up somewhere. Yeah. Great. Hemant, what all are you guys
So honestly, I look at it in a little different way, is that what is it that we have and what is it that we want to do? When I look at what is it that we have, there are so many instruments already existing in the system. From a merchant perspective, what we see is that there's so much happening, and the biggest worry that we have is that everyone's trying to do things by itself, everybody by their own self. So each bank is trying to develop their own solution in their own way, in their own different way, and it's great. The solutions are good and they're innovative, but there's no one uniform answer or one uniform solution, and everyone's trying to create their own payment solutions or evolving over what they already have. Look at it, what happens from both ends. From a merchant's perspective, there are 10 different payment options in addition to what you have currently. Are you sure you want to do it? At the same time, from a customer's perspective, he has 3-4 bank accounts and he's just targeted various options. So does he really know what does he want to, or do we have really a solution which we are thinking from where where it starts from a customer's perspective? So at this stage, I don't think we have an answer to what is an alternative. What we know for sure is that problem is that it's not really interoperable. It's not that the entire ecosystem is working together. An example of it would be, had the mobile phones been only limited to the network that you've been offered to, you would have not seen the telecom revolution. And if unless had it not been roaming, and when you were not in that circle and you are relying on someone else to offer net connectivity to your customer, the same idea has to be extended to payments, where you really bring it to a point where you create one uniform solution if you have to make that change. So IMPS, for example, is a great solution. The challenge is that they have done a good job in enabling the receiving side of it. The origination side again is unsolved for, because is the customer really comfortable generating an MMID, generating an MPIN, going on as how many customers are of the 300 million are on net banking? So you make it really easy and make it uniform across the industry. Only then will you see a solution really riding. You have 300 million debit cards. Why can't we just solve for it in the first case? Why can't we just make it easy? There are 6-digit OTPs, there are alphanumeric OTPs, there are static OTPs. The payment pages are not optimized. Someone's pulling SMS, someone's not. So the answer lies in creating uniformity. Unless and until we move towards that, it will be a confusion at the merchant's end, at the customer's end.
And can you share something on going from prepaid to postpaid in some cases? Have you tried any postpaid payments, which is like card on delivery or wallet on delivery, as one you were saying?
So today we have our field executives carrying terminals and offering customers to make payments when the delivery is done. There is a good amount of response that the customers are actually wanting to pay, but it also creates a lot of the efficiency and the time that it takes to deliver, to find a customer, and to optimize the payment at the last leg. Also at that times, I have ordered the deliveries at my home, I am in office. How do you enable payment? The best answer to this is that I complete everything before it leaves my shop. And unless we do that, there are options. We have terminals that are carried by the field executives to accept payments. But however, we strongly feel that the overall shopping experience is incomplete if I can't complete the overall, the entire transaction right at the time when he's doing it. That's the moment of truth for the customer.
Bhavin, you see a lot of merchants across different categories. Would you be able to share anything? Has anyone cracked this alternative to COD?
Cracked an alternative to COD, I don't think so. However, what has happened in the last few years with so many direct debit to bank opening up, what we also call it as net banking, it has really helped the cause of online payments to a great extent. In terms of, so for example, on our payment gateway, we have close to 40% which comes from net banking. So there was a huge market which was getting missed out, which has got captured in the last 5 to 7 years. So I think some good work did happen on that side. However, again, I will just like to build on what Hemant just mentioned, is that the experience which the customer has if he pays through bank A versus what he pays through a bank B is sometimes totally different. One bank says you need to enter your ATM PIN. The other bank sends an OTP. The third bank asks for an internet banking password or a transaction password. One bank asks for a grid value. So there are multiple mechanisms which each of the banks have put in place.
What's a grid value?
So that I have a personal experience because I bank with one of the banks which gives a grid on the backside of the debit card.
Okay.
So you need to enter a few values from the grid. So the point is the experience across banks is extremely different. Even in card payments, earlier it was so standardized as you enter your card number, your expiry date, and your CVV or a CVC value, and the payment is done. Now we have again an OTP introduced on top of it, or a second factor. While I do contribute e-commerce booming a lot because of these security features brought in by the regulator in the country. But yes, it also has compromised the convenience part. At one time, we were, really positive about the IVR channel, but because of, OTP getting introduced, the channel has taken a bit of a beating. So the point is, can we as an industry, work together, work with the banking fraternity, work to kind of give a uniform experience to make the payment experience so seamless that the customer is compelled to use it if he has the capability of using an electronic option.
So is IMPS the answer?
IMPS, yes, to a great extent, but again, the puzzle still needs to be solved. How many of us know our MMIDs? So these are a few challenges that need to be addressed. I think we, again, as I said, we need to work towards solving those challenges. IMPS, from a platform perspective, it is excellent. It is a beautiful platform which has been put in place. We really need to crack how we can, take it to the next level and make the payment experience seamless both on the merchant as well as the buyer end.
Manju, actually, I want to take the opportunity. You've seen the payment chain from the front to the back end, transaction processing. You know a lot about the margin and the cost at every link of the chain. So do you have any views on, are there any cost prohibitions or are there any cost factors in, better adoption or one versus the other? Do you see overall the cost of electronic transactions going down? I think we've had a previous conversation in which you had shared that it has gone down and it's likely to go down further. Could you comment on, if you compare over the years, how have you seen the cost of electronic transactions fall?
So I think IMPS has definitely been something that has been lurking in the background in terms of reducing the cost of transactions. For sure, debit card MDR being capped by RBI has helped significantly in terms of reducing the cost and therefore getting those 300 million debit card holders to get those cards out to pay. I think those are the big ticket items in terms of reducing cost. And I think RBI trend of reducing two-factor authentication for under 2,000 rupees, coupled with reducing the second factor of authentication and letting the processors handle that risk. I think those are some of the trends I think that will help, because I think 90% of the transactions are under 2,000 rupees. So I think we as an industry can do a lot to be able to reduce or take advantage of that waiving of second factor using contactless to provide a wow experience to the customer. Because I still go after the cost of MDR is not such a big deal, because I heard in the previous session that if you're able to drive value to the merchant, then he doesn't particularly care about the 25 basis points that he fights on, if he's able to get a better stickiness of the customer or increase his top line. So I think cost is coming down, but however, some of these trends where you can provide a wow experience will help drive towards more electronic payment adoption.
And while I'm with you, let's also talk about fraud. That's not a term, at least I hear very often in the electronic payment space. It's very unclear whose baby it is and where does the buck stop. So in terms of between the merchant and the transaction processing companies, where do you see the ownership of fraud lying or changing over the last few years?
So I think for the most part, we also come from the retail side of the offline or card-present transactions. Therefore, from a fraud perspective, especially with the advent of PIN, a lot of the fraud responsibility or liability has moved to the issuer. However, for swipe and sign, it still stays on the merchant and on the processor. Because if there is a fake card, fraudulent card that is used, it is very difficult to tell whether for the merchant to say if it's a fraudulent card. and therefore the fraud risk for swipe and sign still stays with the merchant and the acquiring processor. But for two-factor authentication, PIN-based, it still lies on the issuing card side.
Thank you. So let's move on. I think three alternative methods to COD is what we talked about in the panel when we were outside. Maybe let's talk about each of them separately. I think the big one, the first one is the wallet. It's taken over our lives. I think Uber is solely responsible for all of us getting to know how the wallet works, at least for me. A very compelling use case. Until then, the big questions for us was, what is the compelling use case to put money in advance in a wallet and let it lie? And what we were seeing across wallets all across was just put minimal amounts. If you're doing a recharge, only put 100 rupees and then bring it down as quickly as you can. But the attitude towards wallets have changed ever since the taxi companies have introduced them. So that's the first one. So Abhijit, from your side, I would love to hear your views on what you see impacting the adoption challenges with wallets. What your thoughts generally?
Yeah, so I think, again, if I split between the merchant and the consumer, wallets are a phenomenal leap in consumer experience. We all use wallets and enjoy them. I think from a payment on delivery point of view, wallets will take a good percentage, hopefully, again, moving away from cash to electronic payments, but on delivery would still stay. So I think there's two separate questions here. Are you doing cash on delivery versus wallet on delivery, or are you doing no payment on delivery, which we talked about earlier? My question, and again, I think the way we approach the problem is, how many parallel systems can you do? So you could do it in one way where we say, one or two wallets will become ubiquitous, and then hence, not everybody buys everything just from Amazon and Flipkart, and not everybody travels with just Uber and Ola, right? They're great companies, but we're all going to buy our local groceries. There's going to be a certain percentage of merchants that need to be served. So wallets can't solve every merchant problem and every consumer problem. You really do have to go back to interoperability. So question one to wallet players would be, do you want to solve both the merchant and consumer side, and then multiply that by n number of wallets? Our point of view is fraud is real. There are certain guardrails that need to be in place on how we get merchants onboarded. It is a painful task. It is still physical today. Forget the payment experience. So there are a group of us that are there to get merchants onboarded, to allow them to interoperably support any kind of payments, and wallets will be a larger percentage of that. So more wallets is great for e-payments. It's great for companies like us. It's great for merchants. And our job is to support all of them. And that'll make it easier for, I think, wallets to scale on the consumer side.
Wallets are definitely here to stay. I think the regulations. So two things. One is that the more the payments gets unbundled, which is the more we empower the end consumer to choose their own interfaces, own authentication, own software, it will really lead to more adoption of digital money. And hopefully UPI, the proposed API from NPCI, may solve it. As far as wallets are concerned, I think within Echo, our take is that it has to be a very, very mobile-first design to a wallet. It has to be something which needs to be a hopless checkout kind of an experience, must get delivered through this wallet, because most of the transactions which will get enabled will be on cell phones. So one is just the user experience that needs to be really mobile-first. The other is that most of us use our credit cards because there's credit in that card. But unfortunately, right now, wallets are not allowed to issue credit, and nobody is really looking. So if you look at the credit card industry, there is no credit card below 20,000 rupee value. So the kind of customers we are trying to reach out to, and especially customers who are more comfortable with wallet, where they want to store small amounts of money, they will need small amounts of credit. We don't have an ecosystem right now to provide. So if wallets providers can deliver a very rich experience in terms of hopless, cartless, and stuff like that, really mobile-first design, and also support it with small value credit, maybe through partnerships or we get the regulations changed, then that will truly drive the adoption of wallets and truly drive digital payments across online and in-store payments.
The thing which confuses me is, will there be like 20 different wallets for 20 different things? Or will 2 wallets dominate or 3 wallets dominate?
Yeah, it will. Yeah, my opinion is that it will be a winners take all kind of a scenario. So 2 or 3 will be the lead providers. Mm-hmm. And these 3 lead providers, if I were to define the winners playbook, I would say that people who would, if through their experience, which they deliver on the mobile phone, if they are able to evolve as a payment method, then those are the guys who are going to be here to stay. The other sources of funds may eventually adopt their payment method. There could be multiple sources of fund, but will eventually, because there is a gap when it comes to a payment method. We don't have a mobile-first payment method right now here.
Got it, got it. Hemant, let me change the question for you a little bit. I think, again, since you're a practitioner, you're seeing this every day. The thing which confuses me is that, some payment methods like the wallets are very applicable to a certain ticket size. But, there are also very large ticket size items. You sell a lot of white goods. What are you seeing in terms of the credit at point of purchase? So, EMI being one of them, are you seeing other opportunities where customers can access credit at the time they're buying something? So the payment method choice is driven by their availability of credit. So it could be a completely new provider who brings in credit at that point. Are you able to see that as a driver for choice of payment, which is availability of credit?
So credit, if you look at it as a form of, for high ticket goods or high end appliances, is definitely a need, because we are seeing a good amount of transactions on credit card EMIs. However, again, if you look at it beyond those, the models that are operating are not really compatible. In the physical world, the entire credit models are not very compatible to the e-commerce models that we have. So at this point in time, we don't have an answer to whether there is a genuine offering that is available for the customer. The construct, if it has to evolve, it has to be something which kind of real time approves the customer, because our model is such that he's buying a product online, and there's a delivery which has a fixed turnaround time on which it has to be delivered to him. The model really has to be where I can kind of give him a decision of a credit beyond credit cards, if it has to evolve, where I can approve him of a loan, and and again the entire regulations around KYC. How do we really solve for effectively? It's an interesting model to solve for. There isn't an answer. What we really need is something which can make it a completely online experience for the customer.
I mean, we have covered wallet a little bit. Maybe can you cover card on delivery and your thoughts on wallet quickly, because 45 minutes are going by fast.
So in terms of the wallet piece, currently, I mean, the Uber example is of course a good one. It has kind of driven the wallet adoption in the country. However, we really need to look at what is the overlap between the COD consumers and the consumers using the wallet. I mean, if that overlap is good, I think it is a step towards solving the COD problem. However, if it is not, if it's the same person who was paying through a card is now paying through a wallet, it's not really taking us in the required direction. So, however, as a payment options provider, we believe in providing all the options in the most logical manner to the consumer and allow him to decide. So, even you touched upon the EMI options. So, yes, that can become a good, attractive option for consumers to select the EMI option, and we are inducing him towards making an online payment in case they have a credit card. So I think from a payment aggregator perspective, we really will aggregate all the possible payment options which are going to be present in the country, which are electronic in nature, and kind of leave it to the merchant to, pick and choose which are the most favorable ones from their consumer perspective, and work on the experience part in terms of making it super smooth so that, more and more transactions happen online.
So I think we still don't have a clear answer on what will be the choice alternative to COD. Maybe we can do a poll again on what we think is going to be the winner, starting from that side. You can be very biased if you want to.
Card on delivery, of course.
Card on delivery? Okay. Abhishek?
For the next 5 years, it's COD which is winning, probably after that.
Alternative to COD. What do you think amongst the other options? What is likely? Wallets?
Absolutely wallets.
Okay.
Yeah.
Great. Hemant?
I think a world-class mobile experience, form factor or modes can change, but a world-class payment experience, which is single click, will change.
Got it. Got it. So just improving the flow of transaction pages. Okay. Manju?
So I think for us it would be contactless as well as wallet as just without the two-factor authentication.
Great. Thanks everyone.